Well, good morning, everyone. Today is Monday. It's January 13th. And where did the first 2 weeks of the year go, right? I think people are just getting back to their jobs and getting back to their lives. A lot of people take New Year's very seriously. As a matter of fact, my parents, uh, I sent them on a cruise. It was their 50th anniversary on the 10th, and they just got back yesterday. So people are just now getting back, but this is good. It means market volatility will increase, and that's what we're looking for. Now, let's talk about this week's data, what's on the table, what we can expect, when the volatility should increase, and so forth and so forth and so forth. Nothing major today. Tomorrow we have CPI, and Wednesday we have PPI. These are major Fed reports, not on their own, but they give us a good understanding of what the Fed is looking at, all right? Consumers price index and producers price index, very, very important. I'm mostly concerned not with the number. I'm mostly concerned with how the stock market is going to react based on that number. The big report this week is going to be retail sales. Again, you're probably thinking to yourself, why is retail sales such a big report? It's not. Keep in mind, retail sales, 70 to 80% of the GDP, of our growth, the entire economy. Folks, people like to buy stuff. Consumers like to buy stuff. When there's money, when employment's at a 60-year high, when there's money flowing, people like to spend money. And we want to see if that's continuing. Retail sales has been one of the biggest catalysts for New Year's rallies, okay, throughout the years. We didn't see it this year. We've had a lot of other stuff on the table. We have China, but nonetheless, retail sales is going to be huge. And then obviously jobless claims and industrial production. We don't have jobless data, employment data this week. We only have housing starts, industrial production, and those are going to be the big reports for the week. So there's a lot of data that the Fed is going to use when they're projecting whether to keep rates at this level or spike them up a bit, especially if US and China are going to continue working things out. So that's this week. It's going to get busy. It's going to get volatile. We're going to see some liquidity. I would imagine if any funds have still not been accumulating or still have been out on vacation or holidays or whatnot or repositioning, I believe this week we are going to see full impact, and that means volatility will rise. I'm not telling you markets are going to go up, markets are going to go down, but we do know volatility is going to rise. And again, the big report this week, in my opinion, is going to be the retail sales. Now, if you look at the numbers, the consensus right here, the change is 0.3. That's the consensus. Look at the range, all right? 0.2, 0.6. The honest truth is anything over 0.2 will be looked very positively, very, very positively. Now, let's talk about the stock market. We have global markets subdued. Hopefully, we're going to have a signing, solidifying phase one. That's very, very important, but the market has already priced that in. And the market has already assimilated everything possible we could imagine. So we're looking for a new catalyst right now. Look at the S&P. It is stretched out to the tilt. We've got RSI levels. We've been constantly overbought this entire upside move. And if you look at the market, if you look at the internals, and I'll go over them in a minute, you will see that the percentage of stocks has actually been declining, which means the market has been working harder and harder and harder to generate this level of momentum. And that narrowing of momentum typically precedes a minor correction. Not a major correction, but a minor correction. So the market is still diverging. Price action's moving higher. Oscillator can't muster that level of momentum. Still slightly overbought, but not to the level that we saw here. And right when this started, we saw the percentage of stocks in the NASDAQ 100, and all of those stocks are in the S&P 500. We saw the percentage of stocks trading above the 50-day moving average go from 90% to 80%. But momentum still kept going, but the oscillator caught it. So this is narrowing of momentum, and that's telling us the markets are getting tired. They're going, and usually that happens right before they move south, just slightly. To add to that, last Thursday, we saw put to call ratio hit close to 65. Anytime it's below 75, it's telling us that there's too many call buyers, that the market is just way, 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 way too optimistic. And when the market gets too optimistic, it turns. Similarly, if the market was oversold, if the market was at 125, that's when it turns. So notice every time we see levels get to these levels right here, 0.70, 0.65, we turn higher and we go to neutral. And that's telling me there's more downside to go. Not a lot of downside, just enough to cool off, to give the market a little room to breathe, to give us some congestion, consolidation, and allow the stocks to regroup, gain enough energy, enough greed to be generated via market action, and for prices to move higher. That's what I'm expecting right now. Iran completely brushing off. I mean, complete like it never happened. Now here's something to think about. Ukraine and Iran, over the airline that killed about 170 or 180 people. A lot of them were Canadians. So there's some friction right now. The problem with that is Vladimir Putin and Iran. I don't think Vladimir Putin's going to allow Ukraine to get too bent out of shape, because his relationship with Iran is still positive. There's still a lot of upside, and Russia has a lot to work out with Iran. So I'm not sure if Putin's going to allow Ukraine to get too out of hand. And I know Ukraine is independent, but Vladimir Putin has a lot of reach. Let's just leave it at that. So to give you a summary, markets are overbought. A lot of data coming out this week, a lot of volatility, a lot of expectations. Don't be surprised if some of it is slightly negative and causes a little softness in the market. Now, I've got something juicy for you guys, something really, really big. Rob Booker, I'm not sure if you guys were live on Saturday, but Rob Booker went live and he answered a lot of questions about income trade. He gave away his #1 dividend stock for 2020. You're not going to find this information anywhere else. The only catch is the page is coming down. I believe it's coming down today. If you want the details of this strategy, this is an income strategy where you can get money put in your account on clockwork every Monday with like 2 or 3 clicks. And we're talking real money. It's an amazing program. It's something I highly recommend you check out. Follow the link below. The page is coming down. Follow the link below. Watch this replay. This automated income strategy is the bomb. Don't miss out. Check out what Rob Booker's got for you. It's coming down today. Talk soon.